All right. Hello, everybody, and welcome to the Monday Open Stream. Is everyone ready for a big Monday, a big earnings week? I hope you are, because I know I certainly am, and we've got a lot to cover in today's show. First up, make sure you've got your economic calendars ready, guys. Take a screenshot of this or whatever else you need. And, of course, be ready for all of the big news coming out this week. Monday starts pretty slow. Then we get a bunch of banks. And, of course, we also have Hasbro, which is, I think, something we need to be looking at. Then we get into Tesla, Netflix, the big tech start, and we keep moving through with a whole bunch of others. So how's everyone going out there? I hope you had a great weekend and you're ready to go. Let's give a big shout out to the people that joined us first. We've got John, Joseph, Oz, Roger, Big Guy, Chris, the Sophia Factor, Italian, Milty Friedman, Blue Mammal. You guys got some funny names. Anthony Weaver, OG Gary, Deeps, Roman, ZMTN Shadow, saying it's time for the Bears to put up the fight this week, or it's all-time highs pronto. There we go. And Zulfi, Ivan, and many, many others. Thank you very much for joining us. If you do enjoy the streams, make sure to smash that like button. And, of course, subscribe as always. You will be covering a lot today. So, as usual, let's cover off on our kind of medium-term thoughts. Long-term thoughts haven't changed. We're still basically pretty bullish on the overall concept of the economy moving forward, even though it looks terrifying. And what that means is that we do believe there is a dip here, and we'll go through that soon. But we can't think that there is a systemic problem until the Fed really let it go. And that's going to mean a few things. Now, what could be the catalyst of a potential sell-off over the next 2 to 3 months? If you know markets, you would know that the next 2 to 3 months technically begin the weakest periods of the year. So I want everyone in the chat to give us their X factor that's going to be used as the excuse if we do sell off. What do you think it's going to be? I'll read out some in just a few moments here. Big jump in wheat commodities, says Sergio. We don't talk about wheat here on the channel, Sergio. Wheat commodities are a little bit scary, you know. I still remember the wheat fields getting destroyed and my contract getting destroyed with them. Yeah, unfortunately, I'm not a big fan of the old softs. Anyway, so what's on the agenda this week? Well, as we know, we've got the big earnings, but let's go through the overall middle term, the kind of macro thoughts. And we shared a couple of things over on Twitter, so let's just quickly rehash these. First one is something that people seem to like a lot, which is smart money, dumb money. Easy for us to conceptualize. Does it help us? I tell you what, they're very disconnected. Generally speaking, when they're so far apart like this, it does actually mark a negative period in the markets over the next couple of months. This is probably the widest I've ever seen it, though. So for a long, long time. So this is pretty significant in terms of how wide it is. We also have a couple of other shares here. This is the one I want to talk about, which is the ERP, the equity risk premium. So what this is detailing is this particular person here, which is John P. Hussman on Twitter, if you want to follow him. And basically, he's gone through and he's kind of figured out a difference of whether this actually is one of the worst ERPs he's ever seen through his history tests. And I guess he's saying, yes, it is. Now, ERP is equity risk premium, basically means compared to cash-free rate, which is often considered things like treasuries or something like that, whether we have a cheap market or not. And on the distribution, it's saying no. Do we not invest based on that? Yeah, not really. That's not really what it's about. But it does say that generally speaking, at these points, bonds or cash can often be considered a better long, like 12-month investment than the markets. So that's an interesting factor. But really, I want to scroll over here to this one here, which is the overall seasonality. Where are we? We're 2 days, so +2 onto this. This has taken over 25 years. And of course, it includes pre-election years in the US for the S&P 500. Where are we right now? We are here. So as ZMTN, I believe, said, it's time for the Bears to put up or kind of maybe shut up for a while because, yeah, it's the week the next 2 weeks are the weeks that it technically should be turning. So let's see what the chat thinks. Is it possible for this market to actually sell off in a world where nobody believes it can anymore? Let's see. Can the market sell off? Can the market... Well, actually, what should we ask here? We should ask, will the market sell off over the next 2 weeks? Okay. It's a simple yes or no question. As we know, we love a good community action. We like to see what you guys think before we go through what I think. But anyway, here's the rotation. Here's the conceptual understanding of, I guess, where we are just based on that one data point. And it's interesting to note. Now, are there any other things that we could be looking at? Well, we did see a little bit of dark pool activity, as I mentioned in the weekend video. This basically just shows us that we probably saw not an extremely large day trade or anything, but certainly some moves. And there are a couple of sectors that I think we need to look through. First up, do not take your eyes off the US 2-year. So this is for the middle term. If we see an acceleration and this somehow gets above 5.1, so make sure you set your alerts, 5.08 to 5.1. If that starts to happen, well, the markets won't like it. They, I believe, will move down. If this continues to weaken, then of course that could be further catalyst for the bulls as well. So you might want to mark out things like down here, which would be 4.3. What's the harm of putting an alert in? It's super simple. You put an alert around 5.1. If it starts to happen, well, at least you'll know what's causing potentially the sell-off. Let's read some chats from what everyone's saying, though, about what could cause the sell-off here. Let's see what everyone's thinking. So Samuel Chia says, I do not understand this effing market. Fair enough, Samuel. CR says, I'm expecting a crash or rally after regional banks report. Interesting, CR. Original BTCs is AI regulation / adoption slowdown. And then a few other people are here saying, you know, some other things. Earnings, NVIDIA, at least negative 10%. 1 second. Ooh, I would have taken your ears out on that one. It's like I've got hay fever and it's not even spring here. How are you feeling about NVIDIA? We'll take a look at that very, very soon. We do need to discuss NVIDIA, one of our favorite charts to be watching over the next 2 weeks. When NVIDIA don't deliver. Yeah, interesting. So my one is going to be zombie businesses. And what I mean by that is bankruptcies are on the massive rise. And I understand that doesn't necessarily mean that it's a systemic issue, but they're actually getting pretty high. Maybe that's going to be the catalyst that they'll come up with as an excuse. We'll find out. Of course, it is a guess. Usually trying to find the reason is not as good as actually watching the price action. So first up, US 2-year, watch this chart. Well worth setting the alerts. Second up, let's watch energy this week. Interesting what happened here. Anyone know what that is? You guys in the chat are smart, smarter than me. What do you think? What do we think this is? Looks ominous, doesn't it? So we got that nice little rally. I can tell you we did some pretty big volume here, as in the market did. And then we saw that sell off on the Friday. So it could be all over as soon as right now for energy. Energy might actually be demand destructing again. And that is in line with our thoughts on US oil. This is obviously where we thought it would get to. This is where it is right now, which it's come back down. Obviously, a lot of people are going to be looking at this as a role reversal concept. Do I want to buy oil? I'm not so sure I'm won over by the buying of oil anymore. I think it will come down. And this is going to be a lot to do with yields. In fact, if you believe that US yields are coming down, as in the 2-year and 10-year, then generally speaking, I would expect oil to also follow suit with a decline there. That's going to be a big one. A few people saying it's a tweezer, and a few people are saying it's an island. Yep, certainly we saw that from energy. So maybe pullbacks could be met by weakness this week. At least that's one of the charts that we're looking at. Of course, nothing is guaranteed or anything like that. It's just more of a technical that we saw appearing a few days after it went bullish based on the OPEC, which if you trade oil, you know what I mean by OPEC and their decision-making processes. And then we go from there. All right, let's look through some other things that we might be watching this week. Of course, we could be looking at high-yield junk bonds. That's always a good one to see whether it's disconnected from the market. It's been pretty bullish. Then it went red on Friday. Anything to read out of that? I don't think yet. We've got treasuries. A lot of people ask me, what are my thoughts on medium-term treasuries? It's really tough. I mean, after 104, I would say I'm quite bullish on it. And at this point, I like that level. Of course, we discussed. But I still think this isn't off the cards. And a lot of that has to do with the report. I'm going to give you guys a little bit of insight. Maybe I'll see if I can get this in tomorrow's YouTube. Make sure to sub for it. I've noticed that a few bank reports, it's in our macro weekly that I do in the private community, a few bank reports are coming out with their new expectation is this for CPI. Very interesting. Down, 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 down. And they believe it's going to turn up and do something like this. Interesting. So they think the next read is actually not going to show a decline. And this is the first time I've seen that put that in reports. So very, very interesting. If anyone knows their history on inflation, it generally doesn't just come down. It doesn't just go, woo, soft landing frame. How good is that? It might be on its trajectory down, but it often has a blip in that. In fact, in the 70s, that's exactly what inflation did. It had a blip and it moved like this. So could it be coming up? Well, I've seen that in a couple of reports that are circulating through the terminal and a few other things. So interesting. Skew, did we see a sell-off on that? No. So from the macro perspective, we didn't get it. Central bank liquidity is still quite low. However, that dark liquidity we talked about is still relatively high. And the US dollar has hit into probably a bit of an extended zone, although I still think it'll get a bit weaker. You can see here it had how many sell-off days did it have? 1, 2, 3, 4, 5, pretty much 6 followed by 1. So it's a very heavy sell-off. And I think this could be faded later on this week. So certainly the dollar is one to watch. Seeing some strength maybe in the dollar, looking at potentially fading this previous period of support, becoming resistance. And I think there'll be some nice fibs in there. And yeah, I feel like the dollar is going to heat up over the next couple of weeks, get even more nice technical trades on it. So it's one to be watching. Now, the other thing that we mentioned, can anyone guess what I might be getting a little excited about in the markets at the moment? And possibly it's starting to come good. We'll read some chat while we see some guesses come through. I know you guys might know if you watch the video on the weekends. Michael says, do we short ZOM? That's up to you, man. But obviously we saw an island. Sold off pretty hard on Friday. We'll see whether it actually does pick up here. Dascorpia says, building firms in Australia are crumbling and bankruptcies everywhere. That is true. There's been quite a few of those. Commercial properties, regional bank zombies, says Tortby. Very possible. And Giles says here, China advised only 1% GDP in Q2 and crisis in real estate market. Yeah, they'll need some stim packs in October during the meeting, I would say. But they will need this. The stim packs will have to come in China. There's no way they can not do that. Was the QQQ rebalancing list released? Jeremy, I'm not sure, but maybe someone in the Discord, join our public Discord or private Discord. Check out links in the description down below. Jump on in there. Someone in the chat or economics, can you please post that if you know? And then some members can obviously look at that one. That would be good. Holding off on TLT until August BRICS meeting. Interesting D-stripe date. That's a good concept. I mean, obviously the BRICS is now the story of the next decade. If you don't know what BRICS is, you better pay attention. It's the alternative to SWIFT. It is a currency war we are in right now in terms of the world. I'm not taking sides. I'm just saying that's what we're in. And basically, you need to be aware of it. You know, Dalio talks about currency wars being this thing that's in these cyclical events, and we are in one. Okay. There is no way that we are not in one. If you're delusional and you don't believe we're in one, well, I don't know what you're doing in finance, because it's definitely on. And this is all about weakening the dollar over time. And it's happened in the past as well. And, you know, it's nothing new, but you need to be aware of it, because at the moment, I don't believe it's changing anything really drastically in your investing, but it may become a huge storyline over the next decade. And I believe it is. All right, let's keep going. A few people are guessing gold. You would be correct. Yes, the shiny metal could be back. Let's have a look at GDX. I like GDX. So GDX is, of course, the gold miners ETF. Now, I do think there's a bit of weakness here initially, but look at this rally we got off that yield move. Now, I've talked about this many times. I've said that when yields go down, if that's what you believe, gold loves that. And gold came off a base. It double bottomed. It broke through a couple of highs over here. And it wasn't just gold as in GDX. It was many, many things. It was Barrick. So if we take a look at Barrick, which we put on the show, what am I doing? There it is. You can see the base here. Very interesting base formation and some nice acceleration there in gold. It's around the right time for it to do it. It is going to be dependent on a few things. One, we're going to need to see the pullback, of course, met by some buy demand. But if we go past a new high, I think that's going to be good. Unfortunately, I couldn't get you the information I thought we could get on the weekend. And I really thought we could get it, which was going to be that money inflows into gold were coming from the big banks and the big institutions. I couldn't see it yet. This is the problem with this stupid data being slightly delayed. I believe they put it in heavy after inflation. Probably the data cuts on inflation day. So I won't know what they're doing. They don't have to report it to it yet. So that's a bit of a pain. Anyway, once we get that information, we'll have a bit of an idea. I would suspect, though, that they have put it in. That's a guess. And therefore, we could be seeing a base formation of gold. Early days yet, but interesting time, right type of period, kind of the right type of injection. I'd like to see weakness into strength here on this metal. And of course, this is also going to be dependent on yields coming down. If you're a believer in 2-year coming down, if 2-year goes above 5.1, maybe gold's going to look shaky, and that could be a catalyst to go the opposite way. However, at the moment, with yields dropping off that 5.1 area, it's looking positive. It's looking positive. And it's not just that, it's also in these ones over here. So if we go and have a look at gold spot, it's the same kind of thing. Weakness off this area makes sense. Heavily traded zone, as I've marked. Amazing how accurate some of these are sometimes. And then we expect this thing to come back down. And I like to see it into this structure or around that 1940. So I'm looking down here. I actually think there's more weakness in gold initially this week. And then we'll find out whether the buyers are committed in here. You're looking for that small time frame change of trend on, of course, the smaller time frames. And if you're interested in the way I look at those things, of course, I do have a day trading masterclass, which is links in the description, fxevolution.com, whatever. But of course, whatever method you use to switch could be interesting in those areas. Ryan Murphy says, it would be massive if the USD lost world currency. Yeah, I mean, that's the most powerful thing about the US economy. And it always is the most powerful thing about any superpower. The Dutch back in the East Indies days, they had the, whatever it was, guilder, or maybe, I don't know what it was back then, but anyway, they had the strong currency. Then we had the pound. And of course, them being the superpower, they lost it during the wars. And then, of course, now we see the US dollar. 82 or 86% of all transactions were done in US dollars a few years ago. It's dwindling, but still very, very strong. Very, very strong. Takes a long time there. It will take decades of restructuring the global financial systems to remove USD as reserve currency. Totally agree. It takes a long time. Obviously, I just want you to be aware, though, that that is a thing that is occurring in the background and people don't want to talk about, but whatever, it's a thing. Okay, so let's have a look here. What did people think about the poll? Let's see what everybody believes on the market, and then we can close that and get to our opinion. So you guys, 75% of you believe that the market will sell over next 2 weeks. Either you're really smart or we're going to be really wrong. All right, let's go into it together. Let's move into the markets and talk about it. So first up, we will go to actually the Dow. Actually, no, the German market. I want to go to the German market. So the German market put in what you could certainly consider is a distribution, a Wyckoff distribution. We have that kind of buyer's climax. We have this potential false break move out. We have a nice test of these demand levels. We breach them, plus breach this left-hand side here, which is pretty big. And then we find a little bit of overextension on the kind of pickup. Now, this is a little scary, where it's picked back up to. A little bit too high for most people's liking. We did see a very small time frame change of trend. So 15 minutes, 1 hour, etc. actually put in a short there. And I mentioned that on the Friday video or the weekend video. And at the moment, so far, so good. Now, I'd like to see this, of course, fall off more. Why are we going on about the German market so much? Well, it's got to do with this. The high has been taken. So if we go over here, here's our high. And German market pushed this a little while ago, hit all sorts of TDs and exhaustion moves and everything. That is all-time highs. All-time highs. Wow. So pretty extreme. And that certainly looked like a distribution to me. Now, not every distribution is going to work out the way you want it to or anything like that. That's the nature of playing statistics in these games. However, it's a very interesting chart. Let's go through another one. Let's have a look now at the Dow together. So we'll load up here the US 30 and we'll have a look at what the Dow is doing. It is boring. Anyone here trade the Dow out of interest? I always wonder. I barely cover the Dow nowadays because I find it to be this chart, which is mostly boring. It can give us good reads very occasionally when we add it in as a spread. But only sometimes. Yep, I agree. There's going to be all sorts of things that will go on through this. Glenn says, that's why we go the other way, which market makes a difference. Nice call on the German DAX. Are you targeting 14,860? Tortvi. Well, you are a member of the community. Yeah, I am. I'll tell you where I'm targeting in a minute. But yeah, US 30 here it is just sitting there in full on supply, not able to get through. Is it a triple top? Is it accumulation? We don't know anything yet. We are absolutely stuck. But we know one thing about coiling markets, that unless they instantly false break down or up or whatever, effectively they can be incredibly powerful. Think about the US 500, stayed coiled for a very long time. You know, we obviously had some bearish enticement around there, that 4,200, 4,150. Then it broke through 4,220. Whoa, well, God, we can't do it anymore. We have to just, this thing's going up 4,300 plus straight away. It did. Then it smashed 4,300, not even a turn event. Then it's now sitting, of course, where it is right now, which is 45.30 it hit basically, and then it sold a little bit. So it's very, very important we understand when we have to give up on these things. And that was unfortunate, but you know, it is what it is. The markets are enticed by the Federal Reserve's sweet liquidity, and there's nothing much we can do about it. So the question was, what do we think about the German DAX in terms of levels for it? Yeah, so 16,000 at the moment. You're saying, do we target a 14,000? That's a big call. How many percent is that? 14%. That's probably about 7. Yeah, so about 14.6, I think you had. It's fair. I mean, from these types of levels, you are going to lose a certain period of time if you keep getting that short in. You are looking, of course, for new lows, ideally, and therefore back into structures over here. Now, for that to occur, for like a 15,000 to occur, which I guess would be a number, it's 1,000 points off. That's a lot of money off the markets as well. I don't really see a positive sign from the DAX at this stage at the current levels it is. Now, if it gets back up into here, well, that's a totally different circumstance. I would expect a new high to be formed, and all of a sudden, you know, you'd have to just drop those shorts and move on from there. But very, very interesting level for the DAX. And that's the one that I'm most focused on in terms of the world indices. If we go over to the S&P 500, 45.30. I mean, you guys called it. You said 45.30 in the chat. I saw you. And what did you get? Let me just see here. On the futures market, this is the chat's number, not my number. Let's see how close you were. You scalps. 40, what is that? Like 45.29.7. So I would say that you are exceptionally good at picking your levels, chat. Well done. I saw you in the chat. A few people said it. I almost pulled the trigger on SDAO some months ago. D-striped. Does anyone actually trade the Dow? Let me see up here. What did people say about that? SARK time, perhaps. Man, you guys love the short arc. That's a very big power one. Yeah. Doesn't look like too many people trade the Dow anymore. Cisco says, all right, I follow the chat signals then. You do whatever you want, Cisco. I would say make your own decisions and figure out, you know, how to make better assumptions. This whole channel is about that. It's about being able to start to create a thesis based on technical analysis. Obviously, as a base, you can use some fundamentals, you can use some data. I like using what we call actionable data, which is always a big point. We actually saw a small change of trend on the US 500. This comes through the Friday session into the Monday session so far. It's a very minor change on a very small time frame, kind of 1 hour and below. Is it enough to stop the freight train? Well, we'll find out. You know, pull-ups could be met by sell demand. Those kind of 45.20s, even here, is possible to short off. Of course, stops would need to be held above these levels up here. And of course, risk management would need to be done. Now, most shorts have failed this year, as you guys would know. And I'll say this, shorting the market is always way harder. 60+% of the time markets are bullish, 40% or ish, or 30-something% actually, I think markets are bearish. So to go bearish is tough. But we did hit 45.30. We did see a small change of trend, and we are in earnings. So will it be what we call buy the rumor and sell the fact? And this comes into our middle story. We know we have the seasonality. The seasonality says bad things happen soon. How bad, we don't know. But of course, pullbacks happen in the bad months of the year. August, September, October tends to see a rally after that. That's just what the data says. Okay, data's cool. We see small turn up here as the market approaches a very key point. We know that psychology of the retail trader is very bullish at the moment. Most of you guys are probably pretty bullish. Most of you bears have probably given up and said, stuff this, I'm going to wait and hold off. That's fine. Nothing wrong with that. You can always move to currencies. You can move to gold. You can move to commodities. You can move to crypto. You can move to anything. Remember, it's your opportunity to say, do I really want to do it? What we've been talking about recently has been single stocks and sectors. Now, we do this when markets do this kind of a stupid thing. This is just like the playbook of 2020 or 2021. And what was that playbook? You had to go and look at single stocks and sectors because the indices were very hard to get in on. Pullback of 0.2%, woo, 0.1%, 1%, woo, like this. Whereas you were getting really nice bases on certain stocks, which we'll be looking at soon. So US 500, Nasdaq, they all have theoretically done small time frame changes of trend. They also have shooting stars. They also hit some of our key levels. I think it becomes more apparent, though, when we all look together at this, which is the Qs. So, I mean, what is that? Has anyone ever seen this before? Honestly, has anyone ever seen this before in their trading career? That many gaps, and this might not even be all the gaps on the stock market, on the Qs. Anyone ever seen this? Tell me honestly, Chad, have you had this one before? Lee Delmont says lots of indicators are screaming for a pullback at least. Yeah, but that's true. But of course, they can go higher. Now, all indicators will be doing that. RSI, I think you've said it here. RSI, divergences, all of those types of things. Yeah. Of course they're going to do it because a lot of them are based on even our Bollinger. We were outside of 2 standard deviations, a very rare move on the stock market. We saw a pullback, then it went back above 2 standard deviations about a week ago, and then it pushed a bit higher, and then it started to sell off. So I don't think I've seen this many gaps for a while, and I'm sure not all. I haven't updated this recently, but there are too many here, and this is very unusual. In fact, there's one here as well, which we probably should add in. So there's another one. There's just too many of them. I think every 50 points at least we need a gap. And because of that, we know that markets are pretty inefficient through these zones. And that's a lot of potential to fill up at some point. When? Questionable. But do I like this price as a buyer? I like it for some single stocks and certain sectors. Do I like it for the index? Personally, I ask you guys, do you like that price for the index? Be honest. Do you really like this price? Does anyone really like this price? Tell me. Billy May says, hell, I love picking tops. Yeah, that's true. I'm sure a lot of it. Scobro says, I've belly flopped into SQQQ. I guess I'll find out how hard whacking my belly is. Well, if you like getting a big red belly, belly flop from... Has anyone actually dived off one of those top towers in the swimming pool? You know, those diving towers? I've never been up on one, but I can imagine that's pretty terrifying. You know, those 3-story ones? Oh, my God. Imagine belly flopping that. We'll go through some stocks here. Let's see if anyone likes it. No one likes the price. Buy hell high and sell higher, says Mike. Can we do that in certain single stocks instead of the index yet? And JJ says, technically, yes, but fundamentally, no. Here's Phil's question. Says, hey, Tom, I just wanted your opinion when you were going long as an investment in how many increments do you buy the stock to fill your position? It's a great question, man. So it really depends on the type of market. So I'll let you guys know this is just my opinion, okay? My opinion, you guys do your own thing. The first thing I would do is, I like forward PE. Okay, I like forward PE, I like high VIX, I like those types of things. So I'll take you back to a time that I say to a lot of people that I've mentored, and I talked to you about 2020, just to give you an idea of how I filled this position. Now, it turned out to be technically the wrong fill, and I'll explain that in a second. The markets were selling off quite a lot, as we know, and they came down to these levels, and I thought, I'm scared. Okay, I'll be real. I was scared. We didn't see the Fed at that point. We didn't know what was going to happen. I mean, we just shut the world down. Yeah, I'm scared. You're scared. We're all scared. How do I put tons of money in the market? How do you do that? So the easiest way I figured out, in my mind anyway, because at that point we didn't even have the Fed trigger, was to say, well, how much premium can I get for an option at this point for like 6 months? Because let's say you were going to dollar cost average in, or you were just going to buy the dip and you thought, damn, this thing looks good on multiples. Everything looks good on multiples. I'm very excited. Are you better off buying the stock, or are you better off selling the put, cash covered, so that if it keeps going down, you just get executed? But of course, if it keeps going down, what does that do? It brings my average price down. So that's a good, interesting way. And I've always theorized that during absolute meltdowns, that's the way I do it. Cash covered, already wanted to buy it, already committed. But at least that then gives me an average down and an average up, so the market doesn't have to go. Now, I chose like a 3-month. We obviously know what happens with the market at that point. I got a lot of premium, but it went up more than the premium, which was kind of lame. But yeah, overall, it was for me, it was a really good execution strategy at the time. Okay. Now, if you're talking about how do you execute a position over a period, the best way to position it actually is as it goes into the profit. So let's say you want to buy a dip because you believe it's cheap. Generally, you would go in with 1/3 position. Let's say you thought Qs were cheap here, and then you saw the Qs do this. Now, as the Qs break through here, what they do is they kind of change trend to the upside. So let's say you go, oh, that looks exciting. You could then say, okay, I'm going to put another 1/3 in. It could be the bottom. I don't know it's not the bottom. Do you know it's not the bottom? No one does. We're going to be using at these particular investments, we're buying fear, we're buying insane markets, we're making decisions that, you know, are very, very, very difficult at the time, though in hindsight they seem really easy. Then as the market pulls back, which I would guess would happen, I would add my final 1/3. And that's the way I would position in. And I'd basically be doing it as a 1/3 on a style buy the dip kind of thing, if that's where I wanted to kind of start to pick a position up. And then I would wait to see what happens next. Now, what that does is it opens you up to a lot of opportunities. What if it keeps on dipping? You have executed a position based on certain metrics that need to be consistent, whether that's forward PE, whether that's some macro information that you use all the time, whether that's an indicator that you use. I usually like to have like 5 to 7 separated reasons. Once I've got those reasons, let's say 4 or 5 of them, I will basically say, okay, I'm ready to go. And you place a position. Reward the position if it does the right thing and breaks and actually gives you what you believe is a change of trend. If that happens, perfect. You can then add and stack in. Effectively, it's a DCA. But it's a DCA where it's at least pulling back, showing you momentum's coming in. Put your mind in the size of a banker. A banker is going to say, I like a price. That price is going to be, I like 260 Qs. Okay? 260 Qs. Do they just buy 260 Qs? No, they can't execute enough money. So they're going to say, I'm going to buy between 250Q and 270Q. Then if the market keeps going through 250Q, do you think they just buy underneath 250Q once it goes through? What do you guys think in the chat? Do you think they keep buying it underneath the 250Q? Or do they have a different price? Yeah, Fed Bazooka helped in 2020. I'm just saying that's really interesting there. No way, bro. They wait. Yeah, they don't. They stop buying and they wait for what I call the next level of equilibrium, which is the next point down. And because you're all really not good at technical analysis, know exactly what the hell you're doing, of course, yeah. Then when you think about it, if a market goes underneath your structural zone, where's the next level it's probably going to? The next level of equilibrium, the next level of structure, supply demand theory, all of these types of things. So you're looking for that level. You might be really right. And an example of that, I'll give you one because it's coming up this week, so we have to look at it anyway. Let's take a look at the old Netflix, and let's show you an example. So here is Netflix, and by all metrics, in my opinion, Netflix was potentially kind of interesting at this price here. Now, of course, earnings wrecked it, but it dropped like an absolute, just got direct, yeah? And it actually had some change of trend characteristics here. So let's just say you bought the dip here. You put a 1/3 in. Did you see the right turn? Not really. So you basically had a 1/3 of your position. Now, if you saw the right turn, you probably would have activated some extra buy here, pulled back, activated some extra buy. It could have been in there. This is an investment. It's no stop loss. Obviously, you're buying it for the long hold. But by buying a third at the position, waiting for your turn events, then the market gets destroyed and it comes down to the next level of equilibrium, which just so happens to be the bottom for this stock, and it goes. But yeah, that's one of the ways you can apply it. So usually I like thirding, or if I'm going to kahuna it, it depends. I'll usually try some type of average down technique, which for me could be cash covered. Is this an important level for Netflix? Hell yes, it is. And that's why we need to talk about it. So let's discuss. Of course, we do have a gap still. So could we get gap fill? Question mark. But more importantly, we're coming into this structural support. So this was a huge deal. And obviously it was a big deal as well when Netflix did rally back up initially without structure and then sold straight back off. So what happens here is going to be very, very important. Phil says, fantastic. Thanks so much. Honestly, appreciate it so much. No worries, man. Look, Phil, I think about it a lot in terms of the way you have to access in. And I just think that the biggest mistake people do is they go, buy it all. And then they end up getting set with a 2 to 3% discount. They're all in. And then it keeps dipping on them and it shreks them. Now, it'd be better off to buy a quality company with a 2 to 3% discount because it usually will turn around. But overall, that's still not, the best dollar cost average, is it? Or anything in general. That is not the level here. Yeah, so Netflix comes in. It's at a very important zone. This is also a fib of the whole low. So basically, it's back to around that 61.8 kind of fib. So look, it's a critical point, which it always will be ahead of earnings. They've done a great job, I think. Well, I don't think they've done a great job because they forced me to buy a bunch of extra subs. But technically, they did a good job of getting people to buy the extra subs. I'm sure a few of the people in the chat had to do this as well, you guys out there. But those family and friends bonuses don't go anymore. It doesn't work in the US anymore, yeah? The family and friends. I'm pretty sure it's the same as Aussie. So if we do it here, we've got kind of like this higher high. We're looking for a lower low if you're a bear. So you're looking for this to switch through, therefore taking out the last level of demand. At this stage, of course, it's bullish, but it's at that critical point. Now, if it does go for a big bazooka shot, it's going to most likely go for the gap, which of course is up here sitting at 508. So you could put like an alert if you got like a new high and you believed it was sustained by the result. You could maybe look for a 508. That's a pretty big move. Of course, for bears, you're looking for it to go through 411, retrace, and then go back up and do something like this. Kane Wells, man, you've been supporting the channel hard. Can we give it a big clap in the chat for Kane Wells? Thank you very much, sir. 50 American dollars. I will use that in the American economy later this year in September when I come over. I will make sure to spend it all back into American dollars. He says, AUR and Jobby, please. Thanks, mate. Appreciate that, Kane, as always. Thank you very much. We'll do that very soon. JJ says, never catch a falling knife. Wait for the base before buying. Yes, wait for the V, JJ. Absolutely. So the V, and if you understand a lot about time frame changes of trend, the V can be certainly improved than just a standard V. But yes, that's right. You are actually statistically better off to not purchase here and instead purchase here. This is actually better buy than here by statistical fact in markets. So waiting for that is big. All right, we'll look at NVIDIA very, very close, and that will be good. Preston White says, Harry Dent Jr. in May said in an interview with David Lin that the market would absolutely top out for the decade in June. Obviously, he was once again really correct. West Pacific Market Analytics, interesting. I think he says FOS, but I won't say that on the stream. I probably lose my $50 from Kane Wells. All right, let's load up your stocks there, Kane. Netflix, we've got our kind of game plan in terms of what the volatility is. I will report in this daily shows this week. I want to do a new segment where I chuck in some of the big stocks as we get closer to the event and look at the implied volatility of the options coming in. So you guys can see how wide the market expects the move to be. That's just an additional. Would you like that in the chat? Let me know. I'm interested. Also, thank you to the 950 people joining us. We're just over 15 minutes away from the market open. We will go through strategy very soon. All right, let's do AUR and Jobby. Let's see how you've been going over the last week here with these stocks. So this one, I believe, has done better than I expected because, of course, I believed, well, we talked about last week that I thought we might sell around this area. Now, to my credit, it's back there again, Kane. So it's like it never happened, yeah? It went up, down, and all around. It ended up being at the same price. Let's look at the weekly first. So the weekly did reject, and it's still around this stupid supply zone. I don't know how to feel about it. To me, it's just that acceleration into this position. That the stock itself is under my 5 billion read, which you know I don't like. Below that's not usually my favorite kind of stock from a TA perspective. I don't know what the news is. The volume is still quite high. I still think it's at around the topping area, and the weekly did reject into that, back into the zone. So now what we do is, if you get a new low down here, it's probably going to burn and do really poorly. And if it stays above that, you've got to hope. There's no change of trend on any particular major time frame. So at this stage, yes, it's still technically up. To change the trend, I would want it underneath here, which would be around 295. So 294. So 294 or below, change trend. At this stage, still up. Let's give a little Jobby. Jobby Aviation. What's it doing? Did it go through my price as well? It did. Oh, actually, no, wait. I don't even know where this is. That thing's done, man. Why do we still talk about this, Kane? I thought we were done with this. Once we decided that $11 was really cool, we're done with it. Yeah, I still stick with the same thing. $11 is really cool. I want that thing to sell off from here. Now, did we get a change of trend? No. Okay. Not by my metrics anyway. So it could stuff around for a little while. So yeah, very aggressive move. I still think it's a resistance. Sorry, man. That's what I think. It's my opinion, obviously. I'm going against the trend there. But yeah, thank you very much for the donation. And not much has changed. Tap the like show. Thank you very much, Deborah. Always appreciate it. Okay, let's go through a couple of stocks here. So we'll look at one that was brought up by the community last week. We'll go through some rapid fire individual stocks. That was Starbucks. It had an okay week for it from the beginning. You can see here how it ended up going. So nicely done, team. Nicely done, team. 6.21% out of a pretty boring stock. Let's go to the daily here. You can see it just accelerated with the pace on it, opened up and just went boom. It was massive. Hit first TP, so that's pretty important. Let's look at a couple of staples that we've had recently in the portfolio. Now, when I said staples, I mean pieces of trash that we put in the portfolio, or we even consider them, because it was all about hype. Hype baby. So the first hype baby that had was PayPal. Now, I'm torn on this one. It basically hit to me. This is where I had, I'm kind of like cool with that. I think it's, cool and all good. Could it go higher? Absolutely. It could, but, that's a nice little move. It has broken out from that perspective. It hasn't done what I would consider a really nice, proper, solid base churn. If you want to see where that happens, probably going to be around like this price up here, which is what, $79. So I think it's done all right. What does the chat think? Zoom Video Communications. Now, this is probably still got legs in it long term, but it did hit into the top here, and I could see it having a bit of a struggle, especially if the market goes bad. So this is not A-grade quality. Let's look at some of the things that started to pick up on Friday. A pretty hated sector. Healthcare out of nowhere. Look at this thing. Healthcare, island reversal, hey? Interesting. Very strong was the healthcare on the Friday trade. So will it continue? Well, it makes sense in some ways, especially if the market is going to weaken. But yeah, healthcare in particular, a few healthcare stocks were doing quite well. Energy on the flip side was doing quite poorly. And what was more interesting was financials. So we saw the banks come out, pretty good results all around, obviously bought into those results. And then they went up and then they went blur and completely trashed themselves. So is that a buy the rumor, sell the fact beginning to this earnings season? That's, of course, the story here. Now, the chat knows best, so you guys will do this. Dan Reed says PayPal and Apple Pay up as unemployment goes up. Interesting. Let's have a look. PayTal bottoms probably. I could not call bottom yet. I would need the 79 plus taken out. I look, I like the level. We talked about it. We liked the little whatever up to this level, and it did it. But I don't care about it anymore until it breaks through those levels. That's what it is. Infinite says hard to make money in these markets. It is if you have a macro base. If you've been using macro, you're going to get, at the moment, it's been a bit brutal. If you're using pure, just follow 20 moving averages, and every single time it comes down to the 20 on the daily you buy, well, technically it's not that hard. But of course, you might have to kind of like take your brain and disconnect it from reality, and then you'll do okay. All right, let's see the chats here. We've got JJ says PayPal is offering 4% in the savings account. Is that even good? That seems pretty low. And then Mike says Len made some nice breakouts. So we had healthcare then. Let's have a look at Lennar. Okay, that's on fire, it looks like. Now you said nice breakouts. Is that just already on fire? Yeah, that's pretty extended. Now, if you told me about it on this week here, sir, I could say smiley face. But here, very difficult. Already super weak. This was a nice basing, obviously strong trend. Breaches out. You could claim it's momentum. Yes, it is momentum, but it's already been going for 1, 2, 3, one pullback, 5 weeks kind of thing. Thank you very much for sharing it, though. Appreciate that. All right. What else did we have? I think we're going to have to be very careful on the Disney, guys. Be careful on the Disney. I think it could go lower. It just doesn't seem to be basing very well. Does bad in pre-election years as well, traditionally. So that's just, we saw that one gap fill, or island reversal. It ran for a couple of days, and then, it was kind of over from that perspective. Now, there are some other stocks that I wanted to talk about, and they are, let me just quickly go through here. Some of the big ones first. NVIDIA. Now, this has to be on our watch list. NVIDIA 460, almost unbelievable. 9 minutes till the market opens. Big couple of weeks, obviously another large week with a bit of a sell-off. What we're looking for on NVIDIA is actually 15% sell-off. I don't know when that's going to happen, but I suspect it'll be fairly quick. We obviously sold a little bit from the high here, but you're looking for around 15%. We'll report on it when that does, or if that does happen. But if that could be one of the most important parts of this market, funnily enough, even though it won't be to do with their earnings, which is still 37 days away. So this chart here needs to be watched like a hawk. I'm going to set a new alert. So set new alert. I'm going to set alerts underneath 400. I'm going to watch this chart quite a lot, and it could give us some inklings to what the market really wants to do moving forward. I'll be watching that. Chocolate curry, $9.99. Thank you very much for the donation. He says, hey, brother, love that. I found your channel earlier this year's amazing content. Could you show the skew example when it warned us dumb is coming? Yeah, sure. So thank you very much for the donation. So skew is, again, a confluence technique. Basically what the skew does is it shows us a black swan kind of event is expected by the market. Now, of course, if the market expects something, probably not going to happen, correct? So you'll notice actually what happens in 2022 is we actually drop off a lot, and the market keeps selling off. Now, traditionally, if you notice over here, we were kind of getting a bit freaked out, and then it dropped. So what happened here is in July, we actually started to see June, July of 21, we started to see it. The examples that I would show you are these ones here. So you can see 30th of December, we get this incredible shoot up of the skew, and then it just dumps in the first days of January. And it comes off this really big injection, and then it starts dumping. Now, by the 7th of January, we're already here. So if you know what happens with the SPX, it actually sold off very aggressively after that. And January kind of started the whole, sell-off event. Then we also have the April run where we get this very aggressive stock market. Now, during a bear market, which is different to the way we've seen structure this time, which is just truth. Once we broke through 4,200, we stopped this kind of structure. Is that during a bear market, generally you have these like walls of worry that are very quick and they're super aggressive. We got 2 of those. We had one in March into April, and we also had one in August of last year. And they both coincided with skew rising up and dumping early. So generally speaking, you're looking for that dump when you expect technical analysis to be at a key level. So for an example right now, when we saw this, you can see here 31st of May, we see that dump of the skew. Now, if we expect, and then we see it again here in the 13th of June. So 13th of June, the week after OPEX, remember OPEX, which was the middle of June, the week after that is statistically down. So we saw a dump before it happened. That was a good point for where the skew gave us some advantage. The skew doesn't always give us advantage. It's a confluence technique. It's probably a little bit better than a coin flip if used correctly. So that's what you're doing. You're basically saying, okay, what we're doing here is, can we use it with other techniques to build a storyline that makes sense, that gives us a small amount of edge? And it's about stacking that edge in your favor. And that's what we're really doing. Thank you very much for the donation. Appreciate that one. Apple and Microsoft, absolutely. Let's go through some more stocks. So we've done a few so far, and we have not done Apple and Microsoft. So let's have a look. AAPL. I have moved over to the Apple, as you can see down the bottom. And I got to say, guys, and I'm a PC fanboy, I actually love this Apple, okay? I actually love this Apple. It's bloody fast for encoding. So if you do encoding and you want to do YouTube or TikTok or whatever the hell you're doing, it's pretty damn good. It works. The audio is crisper. It fixed my glitch on the PC, which drove me insane. So that was a big thing. And the only thing it can't really do properly is game, if that's what you do, but I'm sure it might come in the future. But I will say this tech is good stuff. Now, why do I like it? I mostly like it because it connects to the iPhone so well and you can make phone calls on it. Stuff's pretty sweet. Pick them up. I was making a YouTube video for you guys the other day. Took 2 phone calls during the YouTube video on the computer. I was loving it. All right. Anyway, don't worry about me. So let's take a look at the stock here. Does that mean I want to buy the stock at this price? Hell no. I don't want to buy the stock at this price. It is pretty extended. Apple, little known thing, it loves the 20 moving average so much. And if you actually add a 20 moving average here on this, watch it on the daily during runs, you might be surprised. Daily 4 hour. Check it out over the years. Go back in 18, 19. You'll see what I mean. When it gets on a run on the 20, it loves the 20. And it just kind of sits there and goes ballistic. Anyway, no change of trend. Level that we would want to watch to actually see something actually happen, which at this stage, it's all bull, all good, would be 20 moving average getting taken out, which would be a big deal. That trend line that's kind of coming behind. But I would say something around here, this watch reaction level 182. So it's nowhere near that. Let's go through Amazon. That's coming in pretty damn hot. That's actually hit my level. Oh, that hit my level. Okay. So Amazon did hit my level. I wonder what that alert was. So I feel like that's kind of in its top zone. Google looked really bad. Then it rallied really hard. So it actually islanded here and went super hard up. That looks okay. But AMD looks like crap. So look at AMD if you haven't been watching it. This stock looks really bad. So I've done some analysis here. We've got a shooting star. I can tell you that this is large volume going through here. Very big volume trades. I don't know whether they're buys, but it doesn't look like it. So big players have placed positions in here. Some people believe AMD is the beginning of a turn in markets. Now, I don't know if that's true or not. Maybe someone here in the chat knows. More than I do about AMD being the beginning. I guess it was back in November of 21. That's for sure. Was it the beginning of the turn? Well, October was the turn. So maybe AMD is the beginning. What do you guys think in the chat? But certainly large trades through this level. Shooting star looks pretty bad. Changed trend already. I don't like it. Look up extension wave, Elliott wave. Is that an extension on the Elliott wave? I can't do. Look, I like Elliott wave as confirmation when you're already in for nice timeframes. But yeah, I'll say one thing: it is very, very difficult sometimes to use effectively for swing. Dan Reed says AMD only semi with a handle forming on the cup. So you're saying, okay, you're basically saying this is the cup and this is your handle, yeah? I actually don't like that pattern very much, but I get it. So here's your handle. I don't know. I don't even want to drink out of that. Do I want to drink out of that? I don't think so. All right, guys, we're 1 minute off the market open. We're about to open here. We've just got a bunch of stocks coming in. We're coming in green on most of the indices, and I would guess that that is probably going to be the first kind of hour as it runs up. If there are going to be sellers here in this market, they're going to be somewhere around in this zone here. There's 15,650. Of course, trend is still theoretically daily up, weekly up, all of those types of things. We do have small time frame switches. I'd expect rally into potential sell, and that's a big one here. AMD is the beginning. It does AI. Okay. Well, anyway, it looks kind of crappy on the chart, and that's all I'm looking at. My opinion, and remember, in trading, it's never about the storyline. It's never about like trying to justify it with the storyline. Don't fall in love with stocks. Instead, what we should be doing is just seeing what the price is doing. At the moment, we've got bullish price. Till proven otherwise, it's bullish. So today we have this little low here. We're obviously seeing a rally here in the market. We just dinged over into the market. So congrats, we're here. And we probably expect a small rally initially. If bears, again, are going to come back through 45.20-ish, should be around that level of the Nasdaq that we just looked at. What do you think of USD CAD? Interesting talk, V. I already did it, man. Because you're a member of the community, just go check out the day trading masterclass. I covered it in there, man, in quite a lot of detail. Just check the video I did today. Aussie Cobber says, at FX Evolution, the US 500 is a 78.6 fib from the December 21 highs. That is correct. It is an extremely big level here. And certainly that makes up for it. So what are the stories coming in? We've got negative 2.5% on copper, which is in line with that mesh, that kind of weakness we saw in energy, metals, demand destruction in general coming through as a play in the markets, just like it did. Remember, we dropped this idea as the end of May into June. I'm now back on the demand destruction train. So basically, I believe, things like copper and stuff may actually weaken. Markets here up 45.12, up 0.16 and 0.32. The Russell 2000 has been relatively weak. So you can see it's kind of sold off a little bit more aggressively, but overall still quite strong. I don't really know what the Russell's doing at the moment, other than it would be, I guess you would say, bullish. But yeah, I don't really know what that's doing. It's in the middle of nowhere, la la land for me. Tesla coming out 2.66% up. Looks like it's going on its way to try to get to 300. So there was a lot of trade. We saw all this trade going through here. Was that all accumulation for a sweet run on Tesla? I don't know. 300, though, is the next level of equilibrium. Trend is currently up. No change yet for this stock. So just remember that. We are still bullish on that stock for now. And Bitcoin, for the cryptos, as we open up the market, didn't do it. No weekly close above. In fact, rejected back down. I'm looking for the weekly close. And you know what the cool thing for crypto traders is? Oh my God, if we get a close above here, is going to be a big deal, in my opinion. So yeah, we're looking for Bitcoin to see what happens next. I'm starting to get excited about crypto again, as I've mentioned, but timing will be everything on this particular coin. And I think we need to wait and be patient. Now, if you're a crypto investor, you're probably starting to get excited. Next 9 months could be cool, or could be at least interesting into the old Bitcoin halving event. But yeah, at this stage, that's a bad weekly close for it. Nothing exciting coming out of the cryptoverse. Meta, I can't believe they built Threads and got away with this. But anyway, this stock's up a lot. Microsoft did the deal with Activision, or get one step closer, still trading at the highs. Very boring at this price. Not interested in it, even though it's my favorite stock in the market. What can we do? So yeah, today is really about, I think, the US 500 kind of approaching this 45.20. See whether it kind of does sell off there. If it doesn't, then maybe that 45.40 could be reached, or even a little bit higher. But this is really the week of earnings. So today's Monday. Remember, earnings comes up later on. We've got Tuesday, Wednesday, Thursday. These will all be volatile days. In particular, I guess Wednesday is the day, because we've got Tesla, Goldman Sachs, Netflix. I will be looking at Hasbro, I believe, on the channel, because I want to see what the American consumer looks like. And I feel like that could be a decent read for us to see what's going on. And the market will be affected by that, of course. And then weeks, 24th of July, my goodness. It's everything on and action stations everywhere. What do I think about Verizon? Usually it's the same thing. It's kind of just stuck in a range of some sort. I tell you what, I put it on the chart and it better not be stuck in a range. Verizon. It's dying. What do I think? I don't. Why do we want to trade Verizon? Do we want to trade Verizon? No, I don't want to trade Verizon. It's very low, and all these telecommunications companies always are. I just think it's boring. Yeah, I'm not a big fan. Let's have a look at the old target here for a second. See whether we got a. I think we got a change of trend. Oh, targets in an interesting zone coming into the old earnings season. Now, a lot of the time, it should actually find buyers around here. So I set an alert and I just got one then. So obviously, target selling off here. Very interesting level. You're going to lose it multiple times, but yeah, obviously stops here. And yeah, it's done a little switch and okay. Target's kind of coming into a very interesting point. Ford down 4%. Roger says Verizon is a boomer stock. Well, because you mean it gives you dibs. Yeah, I just don't think I think they just, it's like slow and laborious. They're okay for options. I wouldn't bother with them. Let's have a look at copper. Copper getting sold off pretty hard back into that supply. So if copper continues to do this and continues to weaken off, then that's really playing into that demand destruction concept. Kevin says Target went bust in Canada. Don't understand their play. Interesting. Poor Target. Target. VIX up 3.83. Tech stocks all up today. Bonds all kind of down. A lot of the defensives are down. Let's have a look at the squiggle charts here just to get into the session. So again, some of the stocks we covered, we did look at healthcare. We did look at the weakness in energy and metals. Healthcare put in an island reversal. It's dropped a bit of that today, which is fine. We know this week is about bank earnings and the Netflix and Tesla. And we know that Tesla at the moment is buying the rumor. Will it sell the fact? Look at that, 292. So it looks like it wants 300, that one. Okay. GDX. So what's today's action? Let's look at the squiggle lines. Say that currently it's not refreshing. I wouldn't mind knowing which sector is actually doing well. Well, we can jump over here for a second. Let's just use this chart here. Markets, heat map, percentage day. There we are. So it looks like it's technology, hardware, system software, semiconductors, and weakness coming through quite a few sectors. Diversified metals. So again, those oils and metals going down. Utilities, defensives mostly down. So it's just really tech at the moment, and Tesla running a little bit as well. So yeah, nothing too interesting here on the Monday. I think things will heat up on the Tuesday as we get the earnings through. This is more of a relief. If the sales are going to come through 45.20, 15,000, whatever it was on Nasdaq. And that's really that. I guess that's a wrap here, guys, for Monday. So thank you very much, as always, for coming out and supporting the channel. We had well over 1,000 of you coming through there for live. So thank you so much. We've got some interesting stuff that I will be bringing to the show, not next week, but the week after. Was it the week after? I think it's the week after. So we've got some upgrades to the show. So I've taken on some feedback. I think you guys will enjoy it. We'll be covering a whole bunch of new things as well. So we've covered our medium term, our short term kind of concepts here. We know the next 2 weeks are pretty important for these seasonality plays. And we'll keep you updated on the shows throughout earnings season. So make sure to subscribe, like that, or share, like with friends, whatever. And I'm interested for this earnings. I'm actually excited about markets moving forward. We've got the gold shiny metal that should pull back and then hopefully find some buyers. And we've got potentially demand destruction in the background on oils and metals. And then we have a fairly bullish market at the moment that's at a pivotal point into earnings. And of course, crypto could be getting exciting as well. So from me here in Australia, I'd like to say a big thank you to each and every one of you out there around the world. And I hope you have a wonderful day. Enjoy your week. Enjoy the sun if you're still if you're in the northern hemisphere. And if you're where I am, it's cold, it's miserable, but it's all about to get spring. So I'm excited for that very, very soon. It's coming. I can feel it. And that means fishing. All right. Thanks so much, everyone. Bye for now. Ciao, ciao. Matthew Semak says, Mav gave a FX a shout out last night. Oh, I appreciate that. I will have to give Mav a shout out. There we go. I know who Mav is. So there you go. Shout out to Mav. You can tell him I said that. Thank you very much. Us Aussies are off to bed now. Yeah, I know. But the American market's so wonderful. Look, it's the best in the world, guys. Diversification, quality companies, innovation. And if you ever ask yourself the question, why do you love the American market so much? It's simple. There's two reasons. The US dollar, which is still the most powerful dollar in the world, and innovation, which is still the best in America. Okay? Now, if that changes, we'll see. All right. Catch everyone. Bye for now. See ya.